Hi, it's Larry Gaines from Power Cycle Trading. Well, it's Sunday night, March the 3rd, and here's my market outlook and update for the upcoming week. Basically, do you know what leads the markets? Well, that's what we're going to look into tonight on this video. We're looking for correlations. We're looking for things that can lead us and tell us the direction that the market's going to take next. So a couple areas that you always want to start with are, let's look to see what U.S. bonds, treasuries are doing, and let's see what the currencies are doing. So first off, I'm going to start off with the this chart right here, and on the bottom these are weekly time frames, so a long-term time frame. So the bottom is your treasury bill, your US 30-year treasuries, and on the top is the S&P 500 weekly. So simple little analysis here is just put your trend lines in. So here's a pivot low, draw a trend line. Here's another pivot low, here's a pivot low, draw a trend line. First off, you can see that we've broken a trend line. We're going sideways on the S&P, but we've broken a trend line. Now if you look at the bottom chart, you see the treasuries have also broken a trend line, and that trend line is to the upside. So the correlation is that bonds, when bonds go higher, the inverse happens with equities. They should go lower. Rarely do they ever go up together in the same direction. So most of the markets tend to believe in what bonds do is what's going to lead the markets in the future. So we'll see here. Bonds tend to be a little bit better at predicting overall direction of the markets than the equities themselves. So by just looking at this one little picture, bonds are moving higher. So if you take this approach, then we should see equities start to move lower. Now here's another look. Here's also the S&P futures, and below is the 10-year note. So you can see it's just almost identical to the U.S. 30-year note, 30-year bonds. So the 10-year notes are moving higher, equities are sideways. So we'll see what happens. But if this correlation continues, where bonds keep moving higher, we should start to see equities move back down. We had a big jump on the bonds last week, so it wouldn't be unlikely for them to pull back and retest a little bit of this and maybe consolidate. So if that happens, then you could see the equities either go sideways or tend to inch up and maybe go towards that 1550 level on the S&P 500 cash. I'll show you that real quick. Now here's the S&P 500 cash, the SPX. You can see we're up against this rising channel here. So it did poke through it and made a high back in February of 1530.94. We're currently sitting right there, pretty close to that right now. But if you look back here, you can see that the prior highs came in right about 1553 was this area right here. So that's potentially a target zone that could be hit. So if bonds do turn over and pull back, then we might get that shot at the 1550 level. Now if bonds kind of consolidate and keep moving higher, we may not even get to the 1550. That's just the way I'm seeing things right now. But we'll look at the various correlations and keep track of it. Now let's look through the currencies to give us a little bit of idea as far as what the markets are doing, and also some of the high beta leading stocks. Now major currency correlation to follow is this Japanese yen. So we can see that yen had a nice pop to the upside the last over the last week and a half, but now it's starting to turn back over. So if this yen breaks down and starts to sustain and push momentum down to the downside, now this will push equities higher. This will actually affect the euro. So let's pull that up. So the euro currency, since the Japanese yen has kind of stalled out, has had a huge move to the downside. The euro going down has pushed the dollar up. Here's the US dollar. You can see it's just had this huge move to the upside. So it's broken through at 618 retracement level here. Let's see, this goes back, the 618, I'm taking this from the prior contract high, which we had back here in, let's see, that was July of 2012, and back down to this low. So we're having a huge move on the dollar and broke through the 618 retracement. That's usually where it pulls back. You can see it stopped and then broke. So, you know, the dollar wouldn't be surprising to see it pull back a little bit, consolidate maybe at the 82 and then move higher. So, you know, based on this this movement in the dollar, it looks like it can potentially move higher, and if it still moves higher, then that's going to force equities lower. Now here's the dollar transports. It's been very strong, and it's holding in. So this is one of the stronger areas of the markets right now, is the transports. So it's right on the 8 EMA, and as long as it holds in there, it could pull back here to the 21. It still would be, you know, okay. The market's, you know, been very strong, but you know, we're looking for signs to see if it's going to roll over or make the next leg up. Now here's the Russell 2000. You know, it's had a huge move up. It's been holding that 8 EMA. It finally broke down through the 8 EMA, and now it's just flirting right on the 8 and the 21. So the question is, what will be the next catalyst to push the market, you know, to the next leg up? And if we don't have that catalyst, then, you know, maybe the path of least resistance is, you know, to pull back. So we shall see. But these are things that you need to follow in order to, you know, see if the cracks are going to get larger or if we're going to get that next leg up. Now here's the Dow. The Dow's been one of the strongest indexes, and it's just really been holding above this 8 EMA. So, you know, you could make the case that's, you know, pulls back here, consolidates, and it's waiting, pausing for the next, you know, leg to the upside. So the Dow remains strong, and then let's look at the Nasdaq and the ES. Here's the ES. The ES is kind of hanging in there too. It's very similar to the Dow, very, you know, very strong. It's been very strong. It's had a pullback, then closed right back over the 21 EMA and the 8. And here's the Nasdaq. You know, it's trying to hold in there too, but it's had a lot bigger price movements to the downside, and it's, you know, tries to close back above this 21 and the 8. So you can see it's consolidated in here for a long time, right at this 2714 level, and it's been bouncing above it, but it's been holding above it. So a lot of you know, strength in the market, but, you know, there are those factors that we need to keep an eye on to see directionally what's going to happen here in the next, you know, few days or weeks. Now Amazon is currently in a major volatility squeeze on a daily time frame. So you've got a pennant formation. You can see a trend line here if you put it in, trend line here. So it's going to break either up or down. So this is one of the big stocks to keep an eye on. So if Amazon can go into the upside, this could fall through and push, you know, the broader markets or help them there. If it goes to the downside, that could push it lower. So that's Amazon. Let's look at Google. Google's very strong. It's just been really holding up here on the, you know, above its 8 EMA. So it's one of the stronger in the technology sectors. So this is one to keep an eye on. So Google, you know, does not want to roll over. This is very, very strong. And here's Apple. You can see Apple's in a, you know, a major downtrend. It broke through some key support on Friday, 436. So the next really support is not until we get down to about 420, 425. Here's Apple on a monthly. You need to really look back at the monthly. So the next major support area comes in right here at 425. So, you know, this could be something where you could get a bounce from the 425 level. Apple starts moving higher. Apple and Google together, that could, you know, throw some momentum into the market. So that's something that could happen. If Apple, though, you know, can't hold in here this 430, 425 level, then the next level support doesn't come in until about 410. So, you know, keep an eye on these various correlations and relationships, and I'll keep you posted and get back with everybody tomorrow after the close. But before I sign off, make sure that you sign up for my weekly boot camp this coming Saturday. It's going to be on weekly options. I'm going to have a lot of great option strategies I'm going to go over. I'll be going over some fantastic strategies, option expiration, weekly type strategies, which are kind of neutral directionally, or ones that are for directional trading. I'm going to go over some really great earnings strategies. You can play high beta stocks into earnings, not caring if it's up or down. Just really going to be a great Saturday, and it will be a recorded event, so please sign up if you'd like to do this. It's powercycletrading.com/boot-camp-4-weekly-options, and this link will also be on the email that's going out. For members at PowerCycle Trading, it's $5.97. For non-members, $9.97. And sign up now, and hope to see you next Saturday.